Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 315 for October 18th, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. And I'm going to display whatever we're talking about there, starting with S&P 500. So today I arranged for Harry Boxer, David Keller, and Michael Filighera to join us. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. And good to have everybody here. We got a lot to talk about. We opened up pretty lousy on the S&P, but it has definitely caught a bid since the opening. So let's find out if we're going to build on those gains from last week and the big turnaround with earnings seasons right here. And maybe what sectors and individual ideas look great right now, because it's going to be very exciting the next couple, 3 weeks. So these earnings are going to flow out, and a lot of people are looking for a lot of big beats and upward guidance. So let's see if that's going to be the consensus here. Before we get started, let's find out who's talking, and we'll start out with Michael Filighera. Michael, quick update on yourself, and again, what's going on at your company real briefly.
Okay. Good afternoon, everybody. My name is Michael Filighera, and I am with logicalsignals.com and also tradershelpingtraders.com. And what's going on with me? Well, I have a lot of history within the markets, but lately I have been operating my trade room. And with that, we basically are day trading both the S&P and the NASDAQ, where the primary focus actually right now is on the NASDAQ. I also provide daily video updates on the NASDAQ, on the S&P 500, and not daily, but I also provide at least weekly updates on Bitcoin, and all are based on Elliott Wave. And so you can find all the videos that are on YouTube, and you can just do a search for me or Traders Helping Traders and then my name, and you'll find everything you need.
Perfect. Okay, and we'll get into how do people get in contact with you at the end of the broadcast. But right now, we're going to talk to Dave Keller about what's going on with him as far as a quick background for people that are not familiar with yourself and also the company.
Yeah, thank you so much, Jim. My name is Dave Keller. I'm the Chief Market Strategist at stockcharts.com. I will say good morning because we're based in the Pacific Northwest in Redmond, Washington. But it's great to be with you guys. And, you know, from what Michael just described in terms of his time frame, and from what I know about Harry Boxer's work from following him before, I probably am going to provide a little more of the longer term perspective on how things are playing out. And I think for most investors, especially if you're short term, relating the short term movements to the long term trends and keeping a proper eye on the long term bias can be really, really helpful. So hopefully I can add some color along those way. But yeah, I'm at stockcharts.com, and I run my own firm. My YouTube channel is called Market Misbehavior, and great to be with you guys.
Okay, great. And we'll get some good insight from you as well. Harry, again, most people are very familiar with you because you had a long history here in the markets, but quick background on yourself and a couple of things that you're offering, or just, you know, what your company's up to.
Right. Well, the techtrader.com focuses on intraday charting using 1 minute, 5 minute type charts, but I'm a big believer that charts and chart patterns repeat in all time frames. I've seen weekly charts look similar to intraday charts. I mean, it's a question of patterns, pattern recognition, price volume surges, and key breakouts above technical resistance levels and below key support levels and trend lines and moving averages, things of that nature. That's what we do at the techtrader.com. I have several hundred traders in my room that are, some of them with me 15, 20 years, brilliant traders who come up with great ideas. You know, I have two eyes. I can only follow a certain amount of stocks, but my room is filled with hundreds of traders that follow the entire universe. So we're always coming up with the stocks that are moving when they're moving. So it's a pretty cool place to be with some very sophisticated and not only sophisticated traders, but guys who are willing to take newbies under their wing and train them, which is a very cool thing too. I'm doing this for over 60 years now. I'm turning 75 in December. Most people don't believe me when I tell them that because of my level of energy, but I love doing what I do, and I like being here with you guys as well. So let's get started.
Okay, you're right. All right. On Mondays, we always start out with some basic questions on the market. And, there are certain sectors that seem to be gathering a lot of steam. The transports are moving. China looks like they're making a turn. The Russell looks pretty good. Obviously, the consumer stocks are doing great with the consumer spending, both here and in China, both very robust. So it'll be very interesting because we're going into that holiday season. What sectors and what stocks you guys are looking at that you think might get a bang to the upside? But let's start out with the basic question. We started today at 44.63 on SPX. And between now and Friday, what do we think the market will be doing, up, down, or sideways? And then what's your conviction level? Let's start out with Michael. Where are we going to be from 44.63? You got a little head start on the upside here, but what do you think?
A little bit higher. And I would give that, I think that we hold below 44.80 until the larger players start to put their earnings out, and that starts next week.
Mhm.
So I think we're seeing some buying in advance of that, which is healthy for the market right now. But I'm going to say higher, but I don't think we really start to break until, say, Apple, Amazon, Google, Facebook put their earnings out, which is all next week.
Gotcha. And your conviction on that is 50-50 or 60-40?
It is 50-50 right now.
Yeah.
Yes.
Yeah, there seems to be some resistance or some level that might 44.80 could be a little problem. And then 44.50 seems to be the support today. So that
Yeah.
range right there is going to be interesting to see if we can break above 44.80 and hold, or if we're going to go under 44.50 and maybe do some retesting. Huh?
Right. And I actually thought that what the market could do is just, like you just mentioned, it could develop that range and then just sit in that range until we get more to go on.
Yeah, I think the news out of China has people a little bit of concern of a slowdown.
Yep.
But the earnings numbers, are just expected to maybe be some pretty darn good ones. So, all right, let's turn over to Dave. Dave, what are you thinking here? 44.63 is where we open the week. Where are we going to be at Friday? Higher or lower than that level?
We most likely are higher from here, and I think again the bigger picture is we're sort of in that seasonally weakest part of the year right now, and so in September and October, my bias is going to be decidedly neutral. I think a lot of times we think bullish or bearish, we think of it as a binary outcome, and I think that third direction of sideways is arguably the most painful, but the most probable right now. And so I think between now and this week, I think as Michael explained, I think there's a lot of anticipation of what earnings are going to do. And to be honest, I mean, you have things like Netflix and Tesla coming out this week. So I mean, there's some some significant names that are coming out, but you're right. It's sort of still very much the beginning of things. But I think overall, the bias in general is going to be a choppy sideways tape until you get into sort of November, December, where it's really arguably the seasonally strongest part of the year, and that's when a lot of upside tends to play out. So I'm sort of in that camp of flat to positive here, but overall, I think it's more of a choppy back and fill type of environment here for the next couple of weeks.
Yeah. And Harry, what are you seeing as far as 44.63 S&P? I know you don't really do it that way because you're looking at specific stocks all the time and you're looking at them with a fairly tight leash. And so, you're looking at things that are moving as opposed to broad-based indexes, but just throw your hat in the ring with the S&P. What do you think?
Well, what you may not be aware of is I'm constantly monitoring the S&P 500 and NASDAQ 100, those two in particular, to see where resistance support might be and where they may be breaking out. What the two things I want to point out here about the current pattern, the pop above the declining tops line since the September high, early September high, and the pop with a curl up in the moving averages and maybe a crossover occurring here is extremely bullish. I think that what Joe Granville said, the market climbs a wall of worry. Well, this reversal not only occurred with a tail and then a breakaway gap, but now we have another running gap. And today is an engulfing bar. I would think that today's close, if we close here or above, could indicate that we're going back up to test the highs short term. Now, we could also do what these guys my colleagues just said. Those are, excuse me, that is consolidating in this range for upwards of 3 or 4 days, forming some sort of flag. Because if you look at the pattern, it represents a kind of an inverse head and shoulders with a declining top line, but more importantly, a break of the trend line and moving averages curling up. This is very bullish stuff, the stuff you see at intermediate bottom. So I think a lot of people are poo-pooing this because they have a bearish in the back of their mind, worried about the market. But I think if you just looked at the technicals, which I do, and I don't worry about fundamentals, because for me, I'm doing this 60 years, and I can tell you that my philosophy has always been the charts will tell you what to do. Right now, the charts are telling me market goes higher no matter what the earnings are. Well, we'll see. The bottom line is right now, if we close above this range, look back 4 weeks, you'll see that for a week, we held at the 44, 80, 85 zone. We could not get through it. And then the market went down. If we should break back above, say 44, 80, 86 zone, we could be right to 45.50 and retest the old high. And then who knows where it goes from there. But I'm much more on the positive bullish camp, unless today and yesterday's lows are 44.47, a double bottom. If it takes out 44.47 suddenly, that's a whole different story for me. But that's the support, 44.47.50. The resistance is 44.80, 85. And so if we break out above that, we should test the highs. If we break below it, we'll have to do some downside retesting. That's where I'm at.
And I got a quick question for you, Harry. You know, the transports had a rough racket here for a long time. Went from 16,000 and change down to 14,000. Hit a couple of bottom low. To me, it looks like those stocks look like they're ready to roar, and they just upgraded JB Hunt. And, you know, they fix these bottleneck things, you know, I mean, wouldn't the transports possibly go nuts going into the holidays?
Well, take a look at the DJ20, the Dow Transportation Index. I've
Right.
been telling everybody that Dow theory says that transportations have to confirm the industrials. Now, I know it's old school, but I can tell you this. We've had a dramatic breakout and run up now 3 days in a row and taken the transportations to a 4-month high,
Right.
out above a triple top.
Right.
And they look like they're headed for the all-time highs. So the transportations are confirming the S&P and NASDAQ here. So I'm not at all negative, not even slightly. See the breakout there that on your chart? And
Yeah,
if
I'm
you
saying,
scroll
but
down-
there's a lot of real estate to go up here, and there's some stocks like, SBLK and STNG and a few other ones that I'm watching that seem like they're getting some steam here. And GOGL, these are all transport-oriented stocks.
That's
And
right.
I'm
but-
just wondering if they're getting ready to go someplace. GOGL is a pretty cheapy, and STNG is also they're
Right,
just,
right. But take that. Now you're talking shipping, the shippers. A lot of the shippers look great.
Yeah.
But take a look at Little Yellow Corporation, which is formerly Yellow Roadway Express. So they merged. And YELL just broken out of a beautiful base pattern, pulled back and formed a little
there
wedge.
you go. Yeah.
And you can see the breakout. I'm looking for a retest of the highs in the 9 3/4, 10 range. If we get through there and there's a triple top there, then it's a $14, $15 stock. So this could double in the next couple of months if the market continues strong in the transportations. You're right. They could even lead the way here. It would be really interesting to watch that.
You have
Well, because
railroads.
again, it just seems like these guys are going to have a lot of shipping to do. And like I say, if they unload those containers in San Pedro, you're going to have people who want stuff delivered, right?
I think a great, more quality, higher price stock is Knight Swift, KNX. Here's a stock that, if you take a look at this chart long term, it's just been a monster. It literally went over the last few years from 8 or 9 into the 50s. And my long-term chart projection is that this stock could run up into the 60, 65 zone in the next month or two.
And as
Where did it
FedEx got nailed, went down to like 200. Is that probably a real deal down here?
I just don't buy. I buy. What the famous quote from is the trend is your friend and buy high and sell higher. I don't like buying pullbacks until
Yeah,
they
this
break
is
out.
you're buying something at a discount, but so it might be discount for a reason. What about the railroads like CSX? Is there anything going on there?
Well, let's take a quick look at it. CSX is at an all-time high, and the chart is fantastic. For me, the projections, and this, by the way, is a split stock. So it looks to me like on a long-term trend, if you just draw a line across the tops, you're looking at something in the low to mid 40s. So it's 34 right now. I think that particularly if it gets across the recent high back in, when was that? May, when it tagged 30, near 35, well, above 35, and it's just underneath it, the stock could move much more substantially. It's got that classic V bottom a year and a half ago, and it's been running up ever since.
And JB Hunt, which was just increased by, I think Morgan Stanley or somebody.
It's the same chart, only it's already broken out, and it's an expensive stock too. I'd
I
rather,
gotcha.
for me, it's a truck, it's really a trucking stock.
Yeah.
I know it says integrated shipping and logistics, but it's really a trucking stock. I know this group very well. That's why I like Yell. I think YELL is the cheapest play in that group, and it has, and it's not, look where that stock was, by the way.
Well, it's not very
Yeah.
expensive either. I mean, it's almost like buying an option.
Yeah, I think for sure this could be 10 and very possibly 15 to even as much as 18 or 20 in the next 6 months.
Yeah. But investigating that sector doesn't seem like a terrible idea.
Exactly.
Yeah. All right. Well, in addition to where we think the market's going, let's go around the round table here and get some ideas on what some fundamental or technical indicators are that might tell us some things. Michael, you look a lot at the Fibonacci and also the Elliott Wave. What's that extrapolating out to? Because you had a great target months ago. You said 4560 on the S&P is a target for the, I think it was the Elliott Wave.
Yes.
And it obviously came in right on the number. So what are your numbers saying now as far as upside and downside with regards to Elliott Wave and Fibonacci? Do you have some projections
I
there?
do. I actually do, and thank you. I find that the pattern in the S&P kind of held so that it would move lower until it broke today above 4472. The break above 4472 now, as Harry was mentioning, the market needs to close up here. The market needs to close above that level to really give that extra boost to the fact it's like, okay, we're above it. Now we're going to continue higher.
Sustainability, right?
So,
Sustainability of the price is very important right now, right?
right now, that is absolutely correct. This to say sustainability of the price, and I can relate that to, it's like the sustainability of the buyers had to be reestablished, and that got reestablished last week. So because they were having a trouble, what I really was looking at was that buyers would come in, run it up, and the levels were rejected. Sellers came right back in, push it back down. They came back, push it up. So it kept getting bought up, rejected, bought up, rejected, until really what I was saying for last week was that the market is at a make or break moment. So either the buyers got to step in, hold it, show their consistency, and then continue to push higher before the sellers could come in and knock them back down. And that's pretty much what happened. Now that has happened, now they have to sustain the next level, and that's 4472. If we can hold and break above 4472, I don't really consider it a huge bullish move. I would think it's bullish, and it opens up the possibility that we will go up and retest 4560. And if we can get up and break that level, and it not only has to break, but it has to hang out and break above and close above, then we've got a shot at that 4600. But we've got a lot of resistance in between, and it's all Fibonacci resistance. We have resistance at 4478, 4493, 4511, 4515, 28, 40, 54. I mean, it just keeps clustering up. And right at the old high, just below it, or actually just above it, we have some solid resistance at 4586 to 4595. And now if it can get through all of that, well, then we got 4622 to 4650.
Yeah. So you still got some wood to chop, you would say, above
big
us.
time, big time.
And then basically, and then like I say, that moving average looks like a move back towards 4,400 wouldn't be disruptive to the whole
No, but
turnaround.
I'll tell you that on the daily, it keeps holding and breaking above those moving averages. And now like the daily 8 or even the 20, I think Harry mentioned it, and I would agree, is beginning to hook higher. That's,
yeah, well, like I say, that's why it still looks good, but a pullback of a short-term nature could still occur, if we can't break through these short-term resistance zones.
I actually, yes. And I actually,
this is Harry. I'd like to interject a point.
Yeah.
He's absolutely right, and I know he concurs with me. But if you go back to the period of about a few weeks ago when we got stuck in that 4480 range. This is resistance right here. We're testing it. Yeah. That's why I said the close will be important. That's number one. Yeah. Number two, the next few days will be important. But typically when you break out like this, above the moving averages, above declining tops lines, and out of a base pattern, you'll get a little pullback retrace platform or a flag or something like that will form, or even a retest. Right. It wouldn't hurt if we tested that gap at 4440 and filled it That
Yeah.
wouldn't be bad either. And all the way down to what you just said at 4,400, 4,408 or something like that, where the 50-period moving averages,
Yeah.
that's key. And if we can hold it in the zone between here and there, back and fill, consolidate for a few days, and then the earnings come out, and then we blow through this level, then we're golden. We're probably going to new highs.
Dave, I wanted to ask you if you're looking at anything, because on a longer term basis, the interest rates are very important. And I've been a proponent that the 175 we saw on the 10-year in March, may not get taken out unless the inflation number, unless we saw $100 crude or something like that. But TLT has been holding this 144, 143 range. It peaked through it, but and we went to 160 something today on the 10-year again. But are you seeing anything on your work that would say that people may be very wrong about higher interest rates? And if they are, that would be very good for the NASDAQ?
All really good questions. And I would say, I mean, my base case as you're thinking between now and year end and then into next year, I think is higher rates. I think there's a reality of a higher rate environment that whether however the short term fluctuates, it certainly seems like that is a logical next step. And I think one of the major themes that I think we'll all be grasping with is we've been very comfortable with things like, if you look at the ratio of financials versus technology, like the XLF over the XLK, we're so used to that going down because financials on a relative basis have been such a bad place to be for years and years, right? I mean, it's been underperforming a growthy sector like tech. And what I would ask people to think about is what if that flips? What if we are in a higher rate environment and the 10-year doesn't just go to 175, goes to 2% plus? What does that mean for the chart of Morgan Stanley or some of the banks that reported last week? What does that do to some of those longer term trends? And how does that relate to the relative performance of some of those banks, and particularly the regional banks, things like Key and others versus technology? And I think that reality is something a lot of people, especially younger investors, are inexperienced for. I mean, I started investing in the year 2000, so I've never really invested during a rising rate environment. It's very different, and I'm not used to financials outperforming much of anything, but it certainly seems like we're seeing that. You're seeing the XLF break to new highs. You're seeing, a lot of the regional banks starting to, test or sort of pop to new highs. So I think there's opportunity there, particularly now through year end. You mentioned higher oil prices, and I think that's a possibility as well. So it seems kind of crazy to think about energy and financials as the next big thing, but I think we may revisit that theme that we saw really in the first 4 or 5 months of 2021 sort of re-exert itself here through year end and maybe even beyond.
Yeah, the bank regionals are very important. I've been talking to people about NYCB because it was at like 12 and I was getting like 5.5% dividend. Even now it's at 14 and you're still getting 483. So there's a regional bank that certainly has been a good friend to us. Again, they're looking pretty good. But
I think the challenge, Jim, looking at, a chart like Key Corp, maybe Key is a good one. I mean, I think the challenge is the same challenge that Harry was describing with the S&P 500, right? You're approaching the May highs, and the real question is, do you have enough buying power to push them above that previous resistance? Yeah. I don't know if the jury's complete all that. You are seeing that in some places. You're seeing that with, some of the consumer names like Home Depot breaking out, railroads breaking out, industrials, but you're not quite seeing in everything. And I think an expansion in new highs right now could be maybe the most important thing to look for if you believe in sort of the longer term bull thesis here beyond just this week.
Yeah, a lot of people, think that if we go above 175, it's going to go to 2 or 2.25. Hey, listen, we've got negative real yields on everything, including junk bonds. So we've got the biggest bubble in the history of mankind in the debt market. And if you start taking out the highs of March on the yield, who's to say it stops at 2 or 2.25? I mean, right. At some point, when you've got a bubble and a debt overvaluation like we have now, you start blowing out to new lows in the price. Who's to say that there's not going to be a event? Because there's a lot of people holding on to paper that, that are yielding a joke. And if they all wanted to redeem at the same time, the debt market is a dealer's market, meaning that these guys could step back and put no bids out there. And then the buyer of last resort is the Fed. And they just got done with 14 facilities they had to create to take in all this garbage debt when it was March of last year. They had to create 14 facilities to buy it, or else the thing would have collapsed. So if you start breaking 175 and you've got a debt bubble, I wouldn't say with any definitive that it's going to only go to 2 or 2.25, because under certain circumstances, there could be an event that would cause a disruption. And if the Fed doesn't want that, they're going to probably have to support the thing so it doesn't go to 2 and 2.25. So I don't know. I think the idea that we're in a rising interest rate environment and that rates have to go higher is a very dangerous thing when you have a debt bubble.
That's correct.
So I don't know. Like I say, I would think the Fed doesn't want to play the 14 facilities so they can circumvent the 1913 Fed Act, so they can buy things that they're really not supposed to through lending money to the Treasury, a lot of, French pastry. But
Yep.
We'll have to see. Right now, we play the market that we've got. Harry, things behind the curtain that you're looking at as far as either technicals or fundamentals?
Well, I'm not surprised, but I'm noticing that some of the precious metals, or at least metals related, uranium and lithium. Take a look at what's going on with CCJ, for example. Look at CCJ in particular.
Mm-hmm.
And take a look at LAC. LAC. And lastly, LTHM, that's another lithium, that's a Livent. It's also a lithium producer. All of these stocks have had phenomenal runs, but some of them are in the 5th wave of their run, so they may have to settle in. But if you look at a longer term picture, you'll see that these are multi-year highs and not a lot of overhead resistance. So you can see that these two groups in particular, the uranium and lithium stocks are really in favor right now, and I don't think they're done. So I think there's going to be some extension and or blow-ups, and that's what I look for. When stocks go into blow-up stage, that's where the biggest money is made for me. And that 5th wave, that blow-off up, and I'm sure our Elliott Wave expert can attest to that. Even though sometimes the 3rd wave is big, the 5th wave can be the blow-up stage.
Oh, particularly in a commodity, you're right, Harry.
Right.
Absolutely right.
So when I'm looking at
are you looking at any of these gold and silver ones? Because I sent out an alert last week on Monday. This GFI.
I was going to mention that although I like gold and silver, and particularly certain little junior stocks, I like AG, First Majestic. I think it's coming out of a
perfect AG and AEM. Yeah,
and EXK is another.
EXK. Yes, I was going to say I saw all these last week, and I sent out an alert because it looks like the tide is turning on this stuff.
Well, and then but then look at the large cap gold ETFs, for example, GDX, JNUG. They've come through the declining tops lines, and they've come through the moving averages. But have they actually broken the trend lines yet? Maybe slightly, but they do it looks like they're trying to reverse after 5 waves down. That chart in front of you is a 1, 2, 3, 4, 5 waves down and a reversal with volume above the 50. So this is very promising. But
like you say, getting above 32.34 on GDX is really important if you want to see 40 or 42.
Yeah, no question. I'm only looking at the possibilities that the group has turned, but why I don't want to anticipate a turn. I want to get some confirmation. And when you've got stocks like even the copper stocks, if you look at FCX and SCCO, those two stocks have turned around and now they're backing off a little bit. But the same thing there. Look at the breakout on that one, FCX. It's right at the resistance from the prior months. So if you get up to say, I don't have the prices scale in front of you, but you can see that it breaks through there. The stock can go back into 60, towards that double top up there. So I think for some reason, metals, precious metals, uranium, lithium, all elements, they're all moving.
Yeah, and the inflation stuff, obviously, if you take out food and energy, it's really shrinking quite a bit from where they were. And if these energy prices are not going to sustain 80 to 100, which is a big if, and if the food prices like soybeans have gone from 17 down to 12, if we do see some of these other things abate, then the inflation numbers next year may not be as high as they are. And a lot of people are saying that the real estate prices may have peaked out a little bit, which would not be a shocking thing, right?
Yeah, but that's a bad chart on soybeans.
Well, that's what I'm trying to say. And that's food, right?
Right, and you can see that head and shoulder type top and then a declining channel is declining moving averages. That's the kind of stock that you just don't know where the bottom's going to be. And I've told all my traders every day, when you anticipate a low, that's when you get hurt the most, because stocks go lower than you think they're going to. They always go further up and down than you think they're going to go to. So wait for the trend to tell you what to do, as opposed to trying to anticipate the trend and you get your butt handed to you.
Never confuse the bottom of the page with support, is what I've always told people.
Exactly.
And GDP is backing off in China, and ours is supposed to back off a bit. And then, of course, if the inflation backs off, then all the growth and all that inflationary stuff that people are freaking out on today may be different 3 to 6 months down the road, which again would offer some positives to the lower yield people on the bond market as well. So it'll be very interesting.
Except that it may affect earnings negatively. And if that's the case, then most institutional investors are so into fundamentals and price earnings ratios and what a company's going to earn, anticipating the future. That's why I do technical analysis for 60 years now, because I'm sick and tired of all the crap that comes out of Wall Street. It's amazing to me. And people pay attention to it, which blows me away.
Because again, a lot of people always focus on the current situation and they say it'll never end. And of course, the world is round. So what is strong this week, for demand and all, and bottlenecks and demand, that could be totally different in 3 to 6 months.
Right.
Yeah, because after high demand and bottlenecks could come in lower demand and no bottlenecks,
Hey, Jim.
Yeah.
Just to add a little bit here on the discussion about who's investing now. Because Harry's making references to 60 years of experience, and I have over 40 years of trading experience. And so what really matters is, I think a lot of the investors that are coming in now that are putting money into 401ks, they're putting money into hedge funds because they need to be in the market, have never lived through a prolonged period of negative. And
that's because the Fed has printed so much money, we can't have any downdrafts.
That's something like that. But I really do think that the Fed has painted itself into a corner, and they didn't use paint, they used glue, so they can't get out of the corner. We have a government that continues to want to push the need for money to get an agenda rolling. Which would actually be beneficial for the country, because it would add a lot of jobs and et cetera, et cetera. But, we just got too many ifs going in. So as far as interest rates go, I think that they've painted themselves into a no-win situation on that one. So I have to agree with what you're saying there. But I think on gold, and particularly on the miners, there's been a major bull call made on the junior mining stocks. And that we're seeing in GDX. Now, how that translates over into gold itself, I think is very, very catchy. Now, again, I'm similar to Harry, that I really approach a market not fundamentally, I approach it technically. And technically on GDX, I'm looking at a weekly chart, it's very bullish. But where's it stopped right now? It broke above the 20-day moving average last week, then came back below it, so it closed below it. And now the market is trying to get back above it. If it can successfully do that, it just opens the door for it to get up to 33.80, 34. And because then it has to break above the 50. But I think over a longer term, that off of the high that we saw in August of 2020, that in and of itself is a larger ABC down. From off of that high, we got a nice A wave, then we had a B wave up to May of this year. Then we had that nice, like Harry had mentioned, 5 waves down, which was a C wave. Now we are bouncing off of that. So if this is a complete move down off of the highs that we saw in 2020, then GDX has got nothing but upside room. Now that's technically based. So, but if I go try to compare that to gold, gold is in a much different position. Gold to me is sitting in this area where it's caught between a rock and a hard place.
Yep.
It's got 1821 on the top and it's got 1660 on the bottom. That's a huge range.
Yeah.
Now, it made a great move last week. Very bullish move. What happened? They took it all back.
Yeah, it failed in the spot price in that 1800 area. So
yes,
it seems like if you get above 1800, 1850 and you get silver above $25, the other side is the promised land. But if you can't get above those levels, then the jury is kind of still out a little bit, huh?
Well, what's the opposite of the promised land? That's
Well,
what
it could
you're
be
gonna get.
it could be sideways dead air as we wait for
And
more.
that's pretty much what it has been right now, at least on my weeklies and my daily charts. It just doesn't look all that great. So I still think that for me, I think that I have to leave open the potential that it drops first back to 1600. I know that that's a big move from here. But that's what it's showing me. Now, how that's going to balance out against the miners, I don't know.
Yeah. Well, so I noticed that Newmont has about $1,000 production price. So
which is going to, see, that should, so Newmont should do well.
Yeah, well, or at least hang in there.
Exactly. Exactly.
Dave Keller, I want to get some stuff out of you here now. You're looking at the wide lens on things, stock charts and all that. What are you seeing? I mean, do you look at different sectors like, industrials and materials and financials and consumer discretionary, and then maybe some precious metal stuff? I mean, do you see some sectors that you on the macro that you really like a lot?
Absolutely. I think, I was listening to the comments on gold. I would have to argue that the chart of gold is still very negative for me. I tend to look at the GLD more than anything. And I think, the reality for gold is, and a couple of you have mentioned this in some way, I will believe a trend once the trend has confirmed, right? I'm not as much into anticipating when something's going to bottom. I'd much rather wait until there's confirmation. I think what you've seen with the GLD is a number of attempts to get above kind of that 172 range from July and August and early September, and it's failed every time. And you have the RSI at the bottom there, which I think is a really interesting tell here. In a bullish phase, the whole range of the RSI tends to bubble up a little bit, and in a bearish phase, the whole range of the RSI tends to come down. And what you've seen July, August, September, and now again in October is gold has tried to rally. The RSI has been unable to get above 60. And in a bearish phase, that's kind of what that looks like. So until the GLD can get above 172, until the RSI can break above 60 on a rally, it tells you that it's still selling pressure. I would argue that's dominating this. So I think it was Michael that said there could be a move lower in gold. I would tend to think that's the case. You haven't seen a gold trade materialize while you have seen other things rallying just fine. So especially on a relative basis, you're getting hurt. It's the opportunity cost of owning gold that's the biggest problem right now, because you're not owning some of these other things that are just working so well. The other thing I would say,
mining pays 4% about, so that's not a terrible dividend if you wanted to buy something and hold it. At least you're getting 4% about on your money.
So, and that's absolutely right. I think
that's the highest yielding one that I saw that looks like a quality company. Yeah.
Yeah, there are a number of pockets of high yield, and I think that's certainly going to be a challenge for investors, is finding places to get yield. And it's funny. Even the first half of this year, something like REITs were the top performing, or one of the top performing sectors, probably second or third behind energy would be my guess in the first 5 or 6 months. It's a great reminder to think less about what should be working and focus on what is working. A lot of people would argue, in a bullish market phase where, a lot of things are working, REITs are probably not the sexy leadership to expect, but that's how the charts actually played out. So I would be focusing on that for sure. One thing we have not talked about yet today, and that I think is crucial, is the ratio of consumer discretionary to consumer staples. So you can do it on a cap weighted basis. You can look at the XLY versus the XLP, but you can also do it on an equal weighted basis. Look at the RCD versus the RHS. So that's an equal weighted consumer discretionary versus equal weighted consumer staples. And that ratio for me comes from my Fidelity days. One of my predecessors named Bill Doan, who ran the team in the 70s, used to have a chart that he would refer to all the time, looking at offense versus defense. And we adapted to use those equal weighted ETFs. And if you look right now, both of those are breaking to the upside. And it's not just Home Depot and Tesla that are working, and Amazon, those three stocks are a huge weight in the XLY, but even the equal weighted versions are breaking out in the last week. So you're saying it's risk on with the
consumer, and the consumer is 70% of economic growth. So you're saying that's a very bullish thing.
That it's hard. I would argue it's not usually a good idea to be bearish in the face of that ratio rising dramatically, which is what it's showing you right now. It's
And
showing you
today
that offense
we're
is
down on
the field.
XLP today, and we're up remarkably on the XLY. So I think that's 100%. That's a good thing to bring out. And like I say, the report on the economics out of China stunk today, but one thing that didn't stink was their consumer spending, and their consumer spending number was up.
Yeah. Yeah.
So, and then our retail sales blew it out of the water last week. So, 70%, they're going to probably have to increase their GDP estimates for Q3 because they're so wrong. They were looking for down 0.2 on retail sales and it was up 0.7. So,
Jim, just one last comment on gold, if I might.
sure.
I agree with both guys. I think both up and down, first down, then up. And I want to just point out that if you look at the GDX and the GDXJ, which is mostly junior gold and junior silver stocks, you'll see that all of them have had 5 waves down. They broke back up to the moving averages and declining tops line, and they've stalled in here.
Right.
If they're going to pull back and retest, they would probably be looking at potentiality of an inverse head and shoulders type pattern, which if it doesn't break down any further than say that moving average around there, and then it consolidates nicely for a week or two even, then it moves up through this little double top or the neckline of the head and shoulders, then you're in a much bullish phase. And that's the point where you should consider buying it, not anticipating a low here. Like,
Yeah, this could be a deal where it's closer to Thanksgiving or Christmas and New Year's before it gets on its horse, right?
Yeah, that's what I agree with. Right.
Yeah, because a lot of times I found out in history, the end of the calendar year and the beginning of the new year is when gold makes its biggest moves for whatever reason. Actually, a lot of markets make a lot of their biggest moves at the end of the calendar year and the beginning of the new year, because that's when people move their money around, right?
I just wanted to point out, though, that the moving averages are crossing over. And the last 2 times they did that in end of March. And then prior to that, in June of the prior year, both times they retested for a few days and then they took off. And so this might be the retest, and the takeoff could get you on the GDX, for example, to 35 3/4, 38, and even as high as back to 40. From where we are now, 32.46.
Yeah.
All right, let's swing over to Michael and get some specific ideas on some markets that you're looking at, be it the index or specific issues. Do you see a couple of ideas you want to share?
Yeah, I do actually. And again, even I think as a swing trader, you can play the S&P, you can play the NASDAQ. The NASDAQ has just absolutely gone nuts today.
So what do you want to do? You want to look at QQQ? There you go. And you think that looks like it's going somewhere?
Actually, right now, it doesn't. It looks like it's done an ABC up. So I don't know how much further the Qs can really go. Again, so much plays out against earnings. And so I think that's like, if you want to play earnings, then I do feel that the next point that the S&P, the NASDAQ could get to is 15,400. I think that's going to be major resistance right now. And it's going to be a major point where it's like, they're really going to have something extremely positive to kind of keep pushing on this index. We've seen a ton of money come back in tranches, and the last being, last week. And then again, today, we're seeing some pretty incredible strength. And those are all on my hourly bar, all bullish bars from the opening.
If you like
Now,
QQQ, is it a time to load up on Facebook and put a stop under 315 and let it ride? Put up the Facebook thing. And, obviously Facebook is part of the FANG, right? And does it look like 315? Yeah, 315 look like it?
I think, so much of it is, what if it's, buy the rumor, sell the news? The rumor, they're going to blow the doors off. We're going to have all these great earnings reports, blah, blah, blah. I see a lot of trouble ahead for the market. I see that just on an Elliott Wave basis, off of the lows that we saw back in, this is only just going back to October 4th, we got a low in the NASDAQ at 14,368 approximately. And then what it's really doing off of that, in my opinion, now that it's broken above a level, is that it's just putting in a larger B wave. B waves are notoriously deceptive. They're notoriously just like, oh my God, they appear so bullish that everybody races back in, and then suddenly, boom. So I think what's going to actually kick this thing back down is going to be a shock to the system. And where could that come from? Well, you can pick one. I think there's a lot of things hanging out there on a hope, a whim, and a prayer. And so yes, I think you can play this to the upside, but you're going to have to, like you just said, you better have a stop underneath it. And Facebook, I don't know if I'd go into an individual stock. I like playing the index or the Qs for that matter. And you could be, if you're a premium seller, if you're an option trader, you're going to be looking to sell premium, you might want to sell some puts. You know,
And what about on Google? Google looks like it's trying to get out of its own way right now, and it's been
trying to
lagging.
get out of its own way, but I think that Google tends to get stuck right around 28.50.
Because these
So,
two
you know,
companies, if we're going to have the big consumer stuff going on, and if we're going to have the retail and everything going nuts, don't they advertise with these two people significantly? And wouldn't
Yes, and
their
that's what I was
earnings
just
just
gonna
blow
say.
you away when they
Yes.
come out?
Yes, that's what I was going to say. Google is making a very, very strong play with Google Ads. It's a new division for them, but it is doing extremely well.
Yeah.
And so, yes. And so that's why I think suddenly everybody's returning to Facebook, because they think that Facebook will catch some of that business as well, but not like Google. Google is much bigger. Google is much better placed. And I think they're better prepared to do this. And who advertises with Google are not going to be the same that I think advertises with Facebook. So I think in that respect, Google will be the winner. So again, you can play it option wise with Google, and still, I think, you know, you're going to be wanting to sell premium, and there's a lot of different ways to sell premium in options, with options, and still have a basically delta neutral trade, or, you know, to hedge yourself so that you're not going to get killed.
Yeah.
But because I do see this, I don't think it's going to end well. So I don't think that we can just break to new highs and just keep on going. I actually do not see that. I think there's too many things out there in our world and in our country that will prevent that from happening. But again, what I do see happening is that it's a shock. It's like if somebody just comes in and cold cocks you right to the chin.
Mm-hmm.
That's what I think is going to happen to the market, and it's going to be very unexpected. But yet, it's expected by some, but unexpected by most.
Sure. Hey, Harry, you obviously normally have quite a number of stocks on your radar. Can you share a few of them with us today?
Well, I mean, it depends on what I cater to a lot of lower price traders as well.
Sure.
There's a few little junior growth stocks that I follow, but you know, and I put out a lot of swings I can give you. Sure, my recent swing trades to my subscribers, I think, will be a little enlightening. For example, just today I put out CLSK, and that's a electric vehicle related type stock. You know, if you take a look at that chart, CLSK, it's coming out of you see the big explosive move it had, the long falling wedge downtrend, a base pattern. Moving averages are curled up now, and it's right at or just tad above resistance. I think we're looking at a stock that has a potential for substantial snapback, maybe even something on the order of 50 to 100% in the next few weeks on this stock. Look at the relative strength on the RSI on the bottom is obviously extended, but you know, look what it did back a year ago or earlier in the year when it exploded. The relative strength went you know, up to almost nearly 100. But I don't expect that kind of blow off, but I do think the potentiality of this thing turning around and extending here are excellent. A couple more ideas. Recently, hang on a sec, put out a swing on ANY, and it's going crazy. And look at that chart, ANY. Literally, we put it out when it crossed the triple top with a breakaway gap and then the pullback. And after the pullback, it just went crazy. Then it came down and formed the wedge. But look how it's holding near the 50-day moving average. It's also popped to a new high and given us a little pullback. I think this stock has a chance of being a monster. Another one that we put out recently is SOFI.
Oh, yeah.
And that was when it crossed in neckline of that rounding bottom inverse head and shoulder. It's already moved several points. And I think it's headed back to retest those highs from a few months ago. Another one is an oil stock that I've been on since it was a single digit stock. It's now in the 20s. It's APA.
Oh, yeah.
Now, APA may have the need to pull back here because it's overbought,
Mhm.
but it's just crossed through a triple top. And to me, it looks like it's got, any pullback could be a buying opportunity. The stock could be in the mid 30s in the next, several months. So there's a few ideas for you.
How about NIO, NIO?
And I just mentioned that to my subscribers.
Yeah.
It was an old swing of mine. When NIO broke out a few months ago, you can see that recent peak that it had. But then the falling wedge now is broken back out. Notice the moving averages are curling up. The stock has broken through its declining tops line out of a falling wedge. I think it retests that recent high back about a few weeks ago, and then maybe you'll get it back up to that high prior where there's a big cluster of resistance. But I think that, and the other one is XPEV. Take a look at that one. Those two electric vehicle stocks, both Chinese, by the way.
Yeah.
This one looks
That's
even
nice. I
stronger.
see China's making a turn before their Olympics start in February of next year. And I think between now and next year, I think it looks like it bottomed this month, and this is where you want to get in, right?
Yeah, a lot of these stocks look like they have big moves that potentially ahead of them, but at least for retest of the highs are in order here.
How about Panasonic PCRFY? PCRFY. A lot of people are touting this as the electric battery leader for solid state because the other ones go on fire or something. I don't know. But is there something going on here? Maybe it's a little early.
Nah, I mean,
Not too-
again, it's in a long consolidation. And it looks to me like it's got to blow a buck up above 13. To me, you get it above 13 and a half, I'll be interested in maybe running it into the mid to high teens. But for now, it's, you're guessing. It's all of this done so far. And this is the key for me. When you see a stock bounce off a low and run up to a resistance level like the 50-day moving average, but the volume is very low, this is not the kind of price volume thrust I look for. I wouldn't be
Right.
shocked if this pulled back and retested again. It might get up to 13 and pull back, but I would be shocked if this thing blew through 13 with big volume. It's just not acting like it. Plenty better looking charts.
Yeah, totally. Like NIO.
Yeah.
All right. Well, we're coming to the top of the hour, so let's wrap it up by having everybody at least re-explain again who they are and what they offer and how people can get a hold of you. So let's start out with Michael. Michael, again, reintroduce yourself if you would, and then again, what about your chat room and stuff and how people can get
Sure.
involved. Yeah.
Sure. Again, Michael Filighera, and I am the owner and the proprietor for logicalsignals.com and also tradershelpingtraders.com. And so if you want to get a hold of me, the best email address is michael@mjf1 partners. So that's MJF, the number 1 partners.com. I always answer my emails, so don't worry about that. I will just ship it off to trash. I don't. I do have a trade room that's open from 6 a.m. to 9 a.m. Pacific Standard Time. And we are basically focusing on day trading. And right now, like I said, it's on the NASDAQ and the S&P. It's an educational trade room. So my goal is to help to educate people either through Elliott Wave or with Fibonacci or just using moving averages so that I can help them provide a methodology to sustain profitability. And so, but it's also a room where people can come in if they're more of working on a trade plan that I help them develop that trade plans and then to get it tested out and then to see, and some of them are for swing trades. But again, my focus is on day trading. And so I'm using moving averages and I'm using the price action. And that's how I build the trades and how I trade in that one. On YouTube, you can get a daily update of the S&P 500 and the NASDAQ 100 from me, and that would be on an Elliott Wave basis. But I also, again, talk about day trading and things of that nature. If you have an interest in the trade room, please contact me via email, and that I will help set you up. I will offer a promotional price so that you can come in and take a look without making a huge commitment. And I welcome everybody.
Perfect. Okay, back over to Dave. Dave, a little bit more about the stock charts and a little bit about some offers you might have and how people can get a hold of you.
Yeah, it's great to chat with you guys today. And we talked renewable energy there at the end. I'd throw Plug Power as an interesting one. If it can get above 35, that would get us above the June high and the 200-day moving average. At Stock Charts, we focus on three things: good technical tools, educational resources, expert commentary from people like me and John Murphy, Martin Pring, many others. So I'd encourage you to check us out there. I run the Closing Bell show every day, 4 p.m. Eastern on Stock Charts TV. So go to our website. You can find a link at the top for that. Market Misbehavior is my channel on YouTube, and I'd encourage you to check out there. I recently posted a video portraying 4 different scenarios for the S&P between now and year end. The one that was the most common response was we remain between 40.50 and 45.50 through the course of the next 2.5 months. So I'd encourage you to check out that video in particular. And I'm on Twitter at DKellerCMT. Look forward to engaging all of you over there.
Sure. Perfect. And definitely take advantage of it. You guys have a lot of experience and knowledge to share. So that's fantastic. Harry, again, you have the good chat room over there with a lot of great ideas, and explain how people could take advantage of that and go from there.
Well, the Tech Trader has been around for more than 20 years now. Some of my subscribers have been with me that long, believe it or not, but it's a room with several hundred traders in it, and with phenomenal ideas being thrown at me day in and day out, that I will examine and determine whether or not those should be or can be either day and or swing trades. Sometimes I'll issue a swing when I issue a day trade because the stock is coming through a key level that for me would be offering the possibilities of a good swing trade, but it's also an excellent day trade when it's thrusting and breaking out. The Tech Trader, go to thetechtrader.com. We offer a 10-day free trial, no commitments. I think you'll find that in the 2 weeks that you're in it, not only will you get a quick education on the kind of things we do, but also an explanation of my trading methods. I also wrote a book called Profitable Day in Swing Trading, which we're going to be publishing ourselves shortly because it's currently out of print. But yeah, I'm more than welcome to everybody to take a look at what we're doing on an intraday basis as well as on a swing trade basis, because I know some of our listeners are working and can't be sitting at a desk all day with day trading. I know they'd like to, but they have jobs, most of them. So we offer some of upwards of 3 to 5 swing trades per week. I think you'll find some phenomenal trades. Over the last few years, we've had many big winners. So that's what I do. I'm a technical analyst, pure and simple. I've been doing it for, I hate to say this, but over 60 years, and I love what I do. And come join me, and you'll get not only an education, but you'll make some money and enjoy yourself at the same time.
Yeah, a lot of great information here today. So everybody, hope you wrote down the contacts information. Take advantage of that. These guys have a lot of experience and knowledge. And again, they're willing to show you the way a little bit. As far as Option Professor is concerned, we do have a weekly market newsletter that covers everything from the stocks to the bonds to the commodities and everything else. So it is free of charge. You simply go over to optionprofessor.com and stick your email in, and you're all set. And if you have any questions for Option Professor, you just shoot them over to optionprofessor@gmail.com with your contact info, and we'll be more than happy to come back to you with some answers. Great. Thank you very much, Michael, Dave, and Harry. Great to have you with us, and we covered an awful lot. So David, I'm going to swing it back to you, and thanks everybody for being here today.
All right, thanks guys. A lot of good info today. So just a quick reminder for everyone, you can go to TimingResearch.com to get access to the archives of any of the past events and the archive of this one as soon as I can get it posted. Also, if you just search for Timing Research on YouTube or your favorite podcast app, you can also subscribe there and get updates that way. So I just want to thank my guests again for today: Harry Boxer of thetechtrader.com, David Keller of stockcharts.com, Michael Filighera of logicalsignals.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Bye.
Thank you.